Mike Peplow from BancTec. Good to have you with us today. I want to talk to you a bit about the banking relationship that you have, the context that banks have to play within e-invoicing and maybe even the BankPay solution. BankTec and SharedServicesLink.com are currently working on a study that is looking at e-invoicing for the SME market and the mid-market, and also how banks are seen by the market as possible providers of an e-invoicing service. So starting off with my first question, I know that BankTec ran a study in 2011 on e-invoicing and the e-invoicing market and the role that banks had to play in that. First of all, where do banks feature in your thinking regarding the BankPay solution?
I think most people would recognize that BankTec works with a large number of banks around the world, all sorts of banks, both big and small in lots of different geographies. And I think what that does is it gives us a special insight into the needs of the banks and how they want to address specific markets in which they operate, such as the small and medium-sized enterprise market and the corporate market, which they often view separately. I think the first thing I'd say is that in my experience with the banks is that they really want to help business. They are committed to support businesses, and they're looking for ways, in particular, I think, to support better the small and medium-sized businesses in all our markets. And here I think BankPay can make a real contribution to supporting and extending that relationship, because one of the problems the banks has is how do they lend money, particularly to the SME market. I mean, the SME market require relatively small loans, often to support specific working capital moments. And what they need is a relatively small amount of money at a particular point in time. And for the banks, that's very difficult because the overhead of lending for them is quite significant, quite frankly, the sales cost. Now, if we look at BankPay, what they're going to be able to do, of course, with the supplier's permission, is to look at a transaction and say, okay, you've got an invoice sitting at a client, it's been approved, they're a good credit risk. So we can make you a small loan pretty much immediately on the basis that that's an approved transaction. They can do that electronically through their own electronic switch, which the banks like. The supplier gets the money pretty much immediately, usually within a couple of hours. And the bank never have to leave their office, so the cost of sale is low. And we believe that in our discussions that we can actually automate that process. So the banks can kind of have an ongoing agreement with their customers that said, for this class of invoice at this point in the process, we're prepared to lend money against that. And I think that's a real win-win for everybody. I mean, it's great for business because it gives them money when they need it, particularly where it's growth capital. And I think it's great for the banks because it allows them to lend money more effectively. It allows them to lower the risk of that transaction. And it allows them to get a different sort of relationship with their customers. And I think a much closer relationship and a much more supportive relationship. So I think the banks are a great opportunity in this market to partner with business. We think they're natural partners to BankPay and really help move this market from where it is today to a much greater adoption rate and at the same time increasing the working capital liquidity in the market as a whole.
Okay, good. My second question is, how much is BankPay directed at the SMEs and the mid-market, and why? Why is that such a key focus?
Yeah, and you're right to pick up on that. I mean, BankPay originally, as designed, was targeted specifically at the SME market, and it was later widened, I think, to cover the wider corporate market. Now, why are we focusing on the SME market when, most other people don't? Well, I think the simple reason is that for every large corporate, there are probably 100 or 200 smaller companies. And until as an industry we find a solution that allows all the small and medium-sized companies to conduct e-commerce on a pretty level playing field, will never get the right level of adoption to make e-invoicing viable for the whole industry. And I think by looking at the specific needs of the SME market, we actually make it easier for large corporates to get the adoption of their suppliers. Because instead of being forced in some way to take on e-invoicing, with often great reluctance, actually there's a real benefit for taking on e-invoicing. It works for their businesses and it adds value to their businesses. And that's why we targeted BankPay at that sector.
So Mike, a couple of other questions for you on this subject. So really focusing on the kind of SMEs, the mid-market and the bank's role within all of this, and then layering on top of that the BankPay solution. How critical do you see working with the banks is in order to really win adoption in the SME and mid-market?
I think the banks have a huge role to play in helping increase the adoption rates in the industry. I think the banks are one of the few organizations that have so many touch points throughout the industry. And I think the banks want to add value to that relationship. I think they want to increase the amount of support they're giving to their business customers. And I think the banks have the reach and the capability and, quite frankly, the trusted brand to allow products such as BankPay to penetrate the market. Now, I don't think the banks are the only people that can do that, but I think they are leaders in most markets, in most geographies. I mean, there are other types of company that can do that. We're working with people like telco companies and shared service providers. And I think those types of organization also have a role to play. They'll start gaining traction. As we gain traction, we gain momentum. As we gain momentum, we gain confidence, and the adoption rate will increase. But I think really the sleeping giants are the banks. And I think when the banks decide to adopt this style of approach, and I think it's a when, not an if, then I think we will see the adoption rates quickly increase.
Mm-hmm. Because some observers to this market would say that the banks are pretty late to the party and haven't necessarily mobilized with speed at kind of taking the e-invoicing proposition and putting it out into the mid-market or the SME market. So I do think it's a case of when rather than if, but there's still a little bit of tardiness there. What's your view on that observation?
I don't really agree with the observation.
Mm-hmm.
I think, first of all, it's not a very big party at the moment because only 10% of the market has actually decided to adopt. I think the second is that the bank's primary business is not e-invoicing. And I think right now, the sort of capability that exists in the market hasn't really been designed to help the banks help the market. I think it's important to understand what the bank's needs are in designing a product if you want the bank to act as a channel to market. And at the moment, a lot of the capability that's out there is very much aimed at reducing the cost of large buyers and trying in some ways to move that cost to the rest of the industry. That's not an awfully attractive proposition for a bank. However, what I think is an attractive proposition for the bank is to enable their clients to get involved in e-commerce, to help their clients reduce their transaction costs, and to help their clients get speedy, low-cost access to working capital support. And I think that's why BankPay will work well with the banks, and I think will open that channel up to the market, and I think the market will be better for it.
So, Mike, as far as the BankPay solution is concerned, are you looking to have banks actually take the BankPay solution to the market? Are you looking to take it directly to the market?
A bit of both. We have built BankPay so that it can be own-labeled, so that an organization can put their own brand on the product. We built that in from day one. And we've also built BankPay so it's very easy to integrate back into things like payment switches, so that if a bank wanted to allow its customers just to press a button on the screen to effect payment, then that's pretty easy for us to effect. So it's been built with the banks in mind. However, Another fundamental concept in the product is that you can develop and invite your own network. It's like the sort of viral marketing that we've seen in the internet providers. And we feel that that will, once established, allow the network to grow very, very quickly. And therefore we see the banks having a brand out there, we see the BankPay brand itself being out there, and probably other own label brands as well, depending on market sectors. I think what we've got to do is we've got to push on a lot of different fronts in order to get this market going.
I mentioned at the beginning of this chapter that you had been working on a study, you'd worked on a study in 2011 that had been looking at a number of trends and developments in the area of e-invoicing and the mid-market and SME market, and also where banks featured on all of this. I now want to just refer to the initial findings that have emerged from a study that sharedserviceslink.com and BancTec are working on at the moment, where we haven't concluded the actual study as yet, and we're still gathering the data. But as far as the kind of the sneak peek that you've had at the initial findings that have come from this study, which is of a similar nature, it's looking at the SME market and their adoption of e-invoicing and the role that banks has to play within it. How do the findings of the two studies compare? So the study that we're working on now and the study that you had in 2011?
Well, that's a great question. Surprisingly, the results from the study are actually looking quite similar now in broad terms. I mean, some of the percentages are a little different, as you'd expect, because the Nordic market, where the initial study was conducted, is different to the UK. However, what we can say, looking at the initial results, is that e-invoicing still doesn't have a big penetration. Only 10 to maybe 15% of the market is using e-invoicing. And in particular, the SME firms still use paper invoices even when they've got e-invoicing available. So they tend to use e-invoicing for one or two invoices, certainly not all their invoices. And what I would say in general, and I don't want to be specific at this time because not all the results are in, but in general I would say the SME sector still does not believe that e-invoicing is that relevant to them. They still see it as being in the domain of, quotes, the big guys. I think there's a little more traction in the Nordic area than we're seeing perhaps in the UK, and I think it's perhaps no surprise to see that a lot of the initial thinking around e-invoicing definitely emanated out of the Nordic region. So that perhaps doesn't come as a big surprise. What we're seeing in the banks, that's interesting. We're seeing that the banks recognize that there is an opportunity, but actually, with one or two exceptions, very few of them have a real concrete strategy to address that market. So it still isn't really firmly on the bank's agenda. And I think we've still got that problem, of adoption, particularly in the SME area. Mm-hmm. So those were kind of high level, what I would say were the key results. I think there's a couple of things we might want to look for when the results, completed. In that, a couple of the interesting things we saw out the 2011 study were that just under half of all suppliers were concerned about the financial health of the buyers. In real terms, saying, hang on a minute, I've got invoices out there and I'm not as sure as I used to be that I'm actually going to get paid. Now that surprised us in the 2011 study because typically the Nordic region wasn't that impacted by the economic recession. It certainly wasn't as severe in countries like Sweden as it was perhaps in the UK and other parts of Europe. So I think that's going to be an interesting thing to look for. I think the other part of that is perhaps turn the coin over, and the 2011 study showed about 1 in 5 buyers were worried about the financial health of their suppliers. Now that was a little surprising to us because we felt that for most buyers there would be alternatives to a single supplier. And perhaps what we're seeing there is where a supplier is strategic or difficult to replace, buyers are becoming worried that if those suppliers cease to trade, then that's going to have a real risk impact on their own business. So I think there's some interesting things that we're going to be looking for in the final study. I think the initial results are tending to confirm the findings that we saw in 2011.